crazy things can unfold instantly. Borrowers are smarter, they demand faster service, so brokers must follow the trend and be more proactive,
Some lenders are downsizing, we are expanding.
aligning with the right lender who has the proper products. It's very important for a broker to be successful. We have to have our own technology everywhere we operate. There will be way more independent brokers in the next few years than we ever had in the history of this country.
Hi everyone, Serena Diaco here, and welcome to a very special edition of The Digest by AD Mortgage, your trusted source for insights into the mortgage industry. This is our first episode of the new year, and we're starting off strong. In this special 20-year anniversary edition, I'm joined by the CEO and founder of AD Mortgage, Max Slyusarchuk. For the first time ever, Max is joining us on The Digest to reflect on how the mortgage market has changed over the past 2 decades and what those changes tell us about the future. We'll talk about the 2008 crisis, interest rate cycles, digital transformation, the resurgence of brokers, and where things are headed in 2026. This episode is all about perspective, how looking back helps us move forward with more clarity, more confidence, and more purpose. Let's get into it. Hi, Max. Thank you so much for being here with me today.
It's my pleasure.
It's great to have you for the end of the year episode. So we're going to be talking about how the market has shifted, what has changed over the years, and what you have experienced. So for my first question, if we think back to 2005, what was the mortgage market like then, and what was the biggest change?
Almost no technology and not a lot of lender partners that you can align with. Every lender that you have to send a paper file would be a struggle to get an approval, to get conditions, to get the loans to the final stage. No other perks that lenders would offer, and completely different environment from today. No technology, takes very long time to close. Brokers are way better today, with few lenders who are actually leading the way in technological advances, fast closing, and everything online. So it's a big difference.
Even though everything was print and in person, did you see that there was maybe lack of relationships back in 2005?
There was relationships built because you had an external account executive model for every lender. So they have built relationships, and that's the only way, and that's the reason actually they were getting the business, because they came through every door and asked for business, and they were teaching brokers how to submit the loan and what to do and how to work with these bureaucratic lenders, machines. There were a lot of personal relationships, and actually I think that a lot of relationships that have built back then are still existent today. That's what still helps our industry. But regardless of the relationships, you could not close a loan in a week. It was just impossible because no technology, and lenders did not compete as much.
And so let's speed up a little to 2008 crisis. What did it teach you?
Crazy things can unfold instantly. As a lender, you have to be able to withstand anything that comes with the market. And we had a lot of situations. We had 2020, we had 2023 and 24 when the rates were actually going up very quickly. So 2005 was a really good reality check. Who will be able to survive and who will not?
You've seen many trends repeat in the market. Is there any trend that stands out to you?
Well, mortgage business is very cyclical. Every so often something happens and a lot of mortgage companies go out of business. That's because you need to have a lot of people supporting the business. And the minute rates drop, like in COVID, or rates increase, like in 23 and 24, things happen where you cannot expand your business good enough or contract that fast. A lot of companies experience substantial issues once these drastic situations take place. So what we can say that you have to be ready for expansion or contraction and be flexible, and to make sure that you control the cost and control your technology.
To kind of switch over to rates, many people are seeing rates as high. And I hear it all the time. Rates are so high. Do you think that rates are fairly normal in a historical context?
26 years experience in mortgage world. I think that rates today are absolutely normal. They are not high. They are not low. If you compare this to after pandemic rates, they are high. But what happened after pandemic, that's not normal. That's super low. That's what gave consumers like false expectation how much I can pay for the house. If you can finance 2%, that's not your real payment. What do we have today with around 6%? This is absolutely normal. If the rates will drop, we'll all have more business, more homes will be sold, and more loans we can do. But that will come if Feds will decide to drop the rates. As of right now, in my opinion, this is normal environment, these normal rates. The problem that we have is not the rate, but that it takes people to adjust from 2% to 6%. That's a mental issue. If you look 100 years back, these are completely normal rates and nothing wrong with that.
Kind of backpacking off the rates, do you think borrowers' goals, their mindsets, their expectations have changed?
Today, borrowers are a little different than 20 years ago because you have Zillow and you have other technology where they can find property, they can calculate rate. You have a lot of tools and websites and technology where you can find out the rate. Borrowers are smarter. They demand faster service. So brokers must follow the trend and be more proactive and to follow along that demand. So borrowers have to choose the right partner, technologically advanced, so they can keep up with the pace.
So there's borrower demand. What about product demand? How have you seen that shift regarding conventional non-QM and government products?
After the 2008, we had whole product line change with taking away negative arms and all this no income verification loans, etc., etc. The whole product mix have been reshaped. So you have to follow the new products. You have to have the products that consumer wants and that consumer needs. So again, aligning with the right lender who has the proper products is very important for a broker to be successful.
And as you mentioned, technology. So technology has accelerated part of the process. But where are you seeing that our brokers are still facing the bottlenecks, the road challenges, the stops?
We give our partners a lot of technological tools in processing the loan, AI recognition, once they submit the loan price, the loan, etc. In my opinion, the bottlenecks are the marketing, what brokers can do with AI and with all this. They are not doing this. They are not using this enough because it's not an easy part to figure out on yourself how to market using all this technology. So marketing and borrower outreach, how to find your customer for brokers, that's the biggest bottleneck, even though there is a lot of technology available.
Let's switch gears a little bit to some brief AD mortgage history since we just celebrated our 20 years. Do you have a single most pivotal moment that you can remember in the past 20 years of AD?
I would say that would be the moment we decided to move into wholesale and non-QM wholesale, when we reshaped the way we think, what we do, started building technology and softwares and everywhere we operate or touch. So this realization of we have to have our own technology everywhere we operate, that would be the probably biggest milestone.
And while some lenders are downsizing, we are expanding. So what do you think has allowed your company to do so?
The expansion and success is our team, because no matter what technology you have and what you do, it's all done by people, by your team. So we are very excited to have the team that we have at AD Mortgage. And this is our success because we have great AIM portal. It's built by our people. We have an amazing marketing tools that we offer to our partners. Our guys build that. We have an amazing borrower portal that we have created that's done by our people. So it's not technology that brings the excellence to a company, people who build the technology and put this to work and do this on a daily basis. So that's our strength.
And what does the future look like for us, 2026?
We are planning to stay on our course with building new products, new services, listening to our partners, and putting their thoughts into real development and advantages, bringing more ideas to our loyalty program, bringing more ideas to marketing software that we give to our partners, and developing new products and services.
Let's switch over and talk about our brokers who are watching this. So we've seen an acceleration of growth in the broker channel. Why do you think we've had this resurgence with independent brokers?
At some moment in our mortgage history, we had a lot of independent brokers and big networks did not exist. Once great financial crisis hit and a lot of independent brokers were experiencing issues, finding loans, getting right pricing, getting a right lender, getting approved, then they had to go and join bigger companies. Today, there are many lenders that independent broker can work with, and you will be as competitive as being part of the bigger company. So I do believe that there will be way more independent brokers in the next few years than we ever had in the history of this country, because the market normalized, technology is there. There are several lenders who allowing to do that, and it's a very good environment for a broker to run their independent shop.
And you mentioned how important a team is for us, but for brokers, is a team as important as knowledge, as technology? Do you think they're all of equal importance?
Well, to run a successful shop, we do believe that team is everything. If you have the right team, you'll figure out what to do and which lender to work. That's all starts from the right people on the bus.
You've probably seen some brokers make mistakes in the past. What's working better today?
The biggest mistake that I see with our partners is having too many lenders, brokers trying to shop every basis point and then sending loans to the partners they are not familiar with and that they never heard of, and getting burned and losing these relationships where they get in the business. It's important for a broker to align with the right lender, learn their ways, make sure this lender has the technology, has the ability to execute. It's a consistent partner, and don't have 100 different lenders where to send business. You have to have your right group of lenders and stay consistent. The pricing it's not the most important thing. If you have found 5 basis points cheaper, that doesn't mean you have to pull all the loans and send it to a bunch of different places. And I think a lot of brokers actually are doing that. I'm not saying price is not important. It is important, but there are way more important things than having 5 basis points better price.
And we're going to finish off with one piece of advice you'd give to our brokers going into 2026, including your last tidbit. Of course, we're going to take that as well. But do you have anything else you want to communicate with our broker partners?
I would advise our partners to be committed, stay consistent. You have to be all in on what you do. You can't think of it as, well, I'm doing loans right now, then I'm going to do something else. Market comes back, I'm going to jump into this real quick. You build your business while market is slow, because once market started moving faster, there is no time to build a business. That's time to actually make money and get busy. You can't go in and out. That's my biggest advice.
Thank you, Max. Great advice, and thank you again for being here.
Pleasure to be here with you.
20 years ago, AD Mortgage started with a vision to build a company where brokers, lenders, and borrowers work together as one. That vision is still alive today, stronger than ever, and it's shaping how we approach our next chapter. Whether you're new to the industry or a 20-year veteran yourself, one thing is clear. Understanding the past helps you plan for the future. But now we want to hear from you. Do you think understanding market history helps brokers grow faster in today's climate? Yes or no? Let us know in the comments, and don't forget to like, subscribe, and hit the bell for more conversations that keep you informed and inspired. Until next time, take care, stay informed, and let's continue growing together.